Good morning, traders and investors. This is Roger Scott, Senior Strategist for Wealth Press. Today is Wednesday, February 15th. February is more than halfway over. Can you imagine? Remember, it's a short month. There's only 28 days in February, so we got to take advantage of this month the best that we can. It's about 7:41 today, or 7:41 right now. It's definitely 7:41 today, but it's 7:41 right now. Market's not going to open up for almost 2 hours. I'm hoping you guys are noticing I'm doing them a few minutes earlier. Haven't been able to sleep so much lately, so taking advantage by doing my morning videos. Now, again, if you're enjoying these videos, if you're getting some value out of these videos, like our Wealth Press YouTube channel, subscribe to our channel, subscribe to our Telegram channel. All the links are in the YouTube Wealth Press channel, and if you post comments, I will respond there. There's over 1,000 people watching these videos a day on the YouTube channel. They will gain value as well because they will read. They probably have the same questions you do. So don't feel free to post comments. And if you made money on that Valentine's trade we closed yesterday, yes, post it for me. And thanks for sending me all those great emails. Now let's get into the busy stuff. Now, as you can see here, the NASDAQ is down about 20 points. The Dow is down 40 points. Everybody's waiting for tomorrow's report. Now, let me give you some perspective so you could see exactly what I'm talking about. Let's do a little show and tell. So yesterday we had the CPI. Today we've got a lot of reports, but the big one is going to be retail sales, and that comes out in about 48 minutes or so. So retail sales is going to be the big one. Also industrial production. Keep in mind, industrial production does not come out at 8:30. It comes out 15 minutes before the market opens. So you may see some squirrely volatility leading into that report. Tomorrow is the big day because we've got jobless claim, Philadelphia, and most importantly, the PPI. It'll be very interesting to see if the PPI confirms what the CPI is saying. And what the CPI is saying, basically yesterday, the picture was things are working, but they're not working as fast or as well as we thought. The estimates, the actual number yesterday was on the upper end of the range. And again, the Fed keeps telling us, there it is right here. I'm only looking at the core. They were 5.7. It is going down, but they were expecting 5.5. And 5.4 to 5.5, they got 5.6. So, and on the year over year, they were expecting 6.2, they got 6.4. So things are moving in the right direction. But as the Fed has said repeatedly, including I'll be quoting them today, we're going to be at this longer than most people anticipate. I don't know why it's so hard for people to understand that, but they are going to take this further, much further than most people anticipate. The bond market is still moving lower, and as you could see here, I'll expand my range. You could see we're still in this range. That's the 200-day moving average. We're trading below the 200-day moving average, and I believe we're going to hit this support level before we head higher. I'm not seeing any major catalyst to cause the bond market to rally right now, especially if retail sales data is not that great, and I'm not expecting it to be that great. And I'm not expecting PPI to be great. I'm expecting the PPI and the retail sales data to mimic what the CPI report is saying, that things are in the right direction, but they're not there yet. And it's going to be a lot longer because that Federal Reserve President, Jerome, Powell, didn't want to take action a year earlier when he should have. Anyway, I'll save that for another day. But it'll be interesting to see what the retail sales report means. And if this number is really, really good, it could potentially cause the bond market to rally, okay? Because it would reduce rates, because it would give us an inference that people are shopping. And employment is good, although a lot of people who've been laid off are now reapplying for jobs, and that's kind of messing up that number. But the bottom line is markets are cooling off. They're not heating up right now. Now, this is the Dow Jones. Just to kind of show you where we're at, we've been in this range now since November. This is one of the reasons we haven't had sector rotation. So I'm not really expecting the blue chips to give us any kind of meaningful gains. I think we're going to stay in this channel, and I think when we break down, we're going to break out to the downside, not to the upside, unless the Dow literally stays in this range for the next 9 months, and I don't think that's going to happen. I think we're going to have at least 2 more shakeouts, very, very similar to what you're seeing right here. If you look at the QQQ, we have a flag here. It's a flag pattern. Typically, these patterns are bullish, but I'm not seeing any major news for the Fed, for the tech sector, to really show its hand and give us a boost to the upside. I mean, the CPI is not great. Maybe if the retail sales and PPI, maybe if the semiconductors keep going, but the most logical conclusion for the QQQ is to actually come down and continue to range and move into a choppy sideways trading type of climate. Now, if you look at the broad market, you have a lot of opportunity in the utilities right now and consumer staples to the upside. Momentum levels on the 200-day are higher than the 50-day, whereas most other sectors, you will see that they're actually higher on the 50-day than the 200-day. That's telling us utilities and consumer staples are oversold. Let me show you what I mean. And you definitely want to take advantage of oversold areas. You see that? That's oversold. It could go a little more down, but we're near there. Now, what about consumer staples, right? Let's look at consumer staples. Consumer staples looks like they can be coming up to the upside. Looks like they're bouncing off. So again, we could go a little lower, but I think we're near the bottom, and I think we're going to start coming up. And here's the other side of the coin. Consumer discretionary, technology, 88.79, 87.80. Look at communication services, 76.56. Those look like they're going down. For example, look at communication services. See, it looks like it peaked out, and now it's trying to rally again. But usually once it peaks out like that, it just doesn't come back. And even if it does, look, it then just does that again. And even if it does, it comes down and then does it again and then comes down. So once it shows this type of momentum, it usually goes down, which is why I think telecommunication, consumer discretionary is going to go down. Utilities and consumer staples are, in fact, going to go higher. Now, let's talk a little bit about what we can expect today and give you a little eyes on global economy. Now, before we get too deep into it, today is Wednesday. You've got Cisco tech earnings coming out today. They're looking at 85 cents a share, and they're looking at a little higher revenue. Now Cisco has been doing pretty well. There's also Albemarle. There's also AIG. There's also ADI. A lot of chip stocks. Look at that. Chips, tech. You still have a lot of chip stocks. CF Industries, Equinox. Let's see here. Heinz, Marathon Oil. And here's all the expected EPS. Roblox, Roku, CGen, Shopify, Trade Desk, Twilio. Winham is coming out, and Zillow. So there's a lot of stuff. And tomorrow we got Crocs. I can't wait for Crocs to come out. Anyway, I think they're going to do really well. But we're still deep in earnings. Now, the FANG stocks are done, but we still have about 25%, about 22, 23% of earnings left, and I'll discuss that later. Now, today is Wednesday. What do I do Wednesday? I give you actionable trades. So here's what I like for the long side. I like Tidewater. Look at that trend. Wait for a little pullback maybe to the 83, 84 level, but I love this trend. TDW. Next one is ACM. I think we're either long this stock or we got out of this stock the other day or we're still bullish this stock. I don't know, but I love this trend and I love how it's moving right now. ACM. Last, Boeing. You guys know this stock and it's been moving in a nice channel. I really like this channel. Actually, I love this channel. So Boeing is in this channel right now. So I like Boeing. I like ACM. Let me just tell you what kind of stock this is. It's an engineering stock. Perfect. It's not a tech stock. What about this? Oil integrated water transports. Perfect. Transport, water, oil, engineering, and Boeing. We all know what Boeing is. So those are the longs. Notice no technology in there. And to the short side, I've got Walgreens. It's been trading below the 200-day moving average. I don't think this consolidation is going to go up. I think it's going to go down. So I don't like Walgreens and I don't like McCormick and Company. I think this last rally should have given this stock more of an upside, and it didn't. I think the stock is going to come down all the way down to the 71 level. So in terms of upside, I like TDW. I almost said TWA. TDW, ACM, and Boeing. And to the downside, I like WBA. That's Walgreen Boot Alliance, and MKC. Now, let's talk a little bit about global economy. I wanted to really get into that a little bit with you. So, stronger than expected U.S. inflation data. Comments from Federal Reserve bolstered fears of more hawkish move from central bank. Now, Tuesday, I wrote a lot of stuff here, but this is the big one right here. January's core CPI, which is considered more accurate gauge of inflation, slowed to 5.6 from 5.7, but above 5.5. That's kind of what I just went over with you. I wanted to show you. Now, here's the good stuff. And again, I know you guys don't trust the Fed, and I really don't blame you, but there's a lot of them out there that actually have something important to say. Richmond Fed President Barkin said, and Logan said, continue to express the need to hike rates for longer than expected. John Williams said, subdued economic growth and labor market weakness would likely be required to bring inflation back to 2%. So, I mean, they're not changing their tune. Today we have Cisco, Shopify. Oh, Shopify. Okay, I didn't know that. Heinz. Nice. Analysts are now expecting 2.8%. It actually went to 3.1, and now it's coming back. But it's still double what they were expecting just a month and a half ago. Today we're looking at retail sales. We're looking for the number to be up 1.8 million compared to negative 1.1 million. We also have other reports coming out. They're all right here. They're not going to be as important, but crude oil inventories could give energies a boost. In China, they closed lower after hotter than expected U.S. inflation ramps up fear of higher than longer interest rate policy, with technology stocks dropping the most. You saw that? That's what I'm talking about. And in terms of pre-market movers, you'll see the TripAdvisor right now is up 9% and Airbnb is up 9%. This worries me, and I'll tell you why this worries me, because I was kind of getting bearish on Expedia and all those going out stocks, but with these numbers, maybe I should take another look. I'm wrong too sometimes. So that's what I've got for you today. I hope you guys got your money's worth. And remember, Tidewater, TDW, ACM, and Boeing to the upside, WBA and MKC to the downside. Now, before I let you go, the tide could turn in the coming days, and after the aftermath could absolutely make investors wealth for the next decade to come. People are about to be blindsided. Yes, blindsided when massive amounts of cash starts flooding out of their favorite stocks. And that's why. That could spell a disaster for anyone holding stocks. Investors who realize where the cash is going to go and how to take advantage of it could profit and profit big. That's why New Money Crew, Lance Ippolito, you guys know Lance, he's awesome. He's about to hold a special live event at 1 p.m. Eastern Time. He'll reveal a brand new way to get out of the stocks, in and out of stocks, and into something far better, far more effective for today's conditions. Follow the link below. Check out and sign up for Lance's free presentation. There's no cost. You're going to love it. He's going to show you how to take advantage of these markets the right way. And Lance has been red hot. If you guys love my stuff, check out Lance Ippolito. And I'll talk to you guys soon. Remember, comments, likes, emails, support@marketgeeks.com. We're in the YouTube Wealth Press channel. I'll see you there. Bye. Have a great hump day.